this one's for the non-profits, and I'm curious just to lay out a framework what we're going to talk about. So what would be the key structures that we're going to go through that will add value to non?
Yeah, right. Thanks, Ryan. So today I just want to touch on the three sort of top quality issues we come across with accounting for not-for-profits, and they'll also be common to businesses because we work with both. So, yeah, uh, what I did is I started off in school finances after having kids, but I'd always wanted to work for a charity. So that was kind of, we supported a few charities, and I thought, how cool would it be to work for them? But long story short, what we've ended up doing is running a business that helps charities and businesses and schools who are also not for profits run their finances. So and payroll. So I thought it'd be quite useful to sort of touch on what are the sorts of things, the key things that we come across that they need help with, and what are our tips around that.
Cool. And what are the biggest pain points you see for non-profit?
Yeah, so in short, recruiting quality account staff is a big one. Getting quality reporting and getting quality payroll. Those are the top three that we see. So, yeah.
What would be the one should we start with in terms of a solution to one of those?
So recruiting, yeah, it's been a sort of in recent years, we've sort of found a niche in relieving for these not-for-charities to give their CEO or business manager time to find a suitable candidate. So what charities are looking for is someone who's qualified, who knows at least something about accounting, someone who's teachable so that they're skilled in at least learning new software and processes and willing to follow procedures. And thirdly, long-term, which is a big one. So willing to commit to the organisation and see them through, because recruiting is costly, and also often knowledge gets lost in handovers. So those are the sorts of things that we see happening in the accounting space. Charities, by their very nature, they attract people who are passionate and willing to be involved for the cause. So this means often you get very enthusiastic, but not necessarily appropriate personnel ending up working in accounts. Because often what's really common is that it becomes part of a wider admin role. You've got some people working in admin, and it's very tempting to get that role to cover accounts, data entry to sort of fill in the hours or to resolve a gap in the finance department. So quite often what you end up is getting is someone who's been there for quite a while, who's got a really varied role, part of which is accounts. And then what happens when they leave? So suddenly, the employer's got, they've got to restructure almost because it becomes apparent you need someone for accounting and you need someone for all of the super admin and really specific charity work that person was doing as well.
It's always tricky. Like I see the companies that do like interns, for example. So we have people come in for a short period of time. They're willing to give their time for free. On the surface, there's a financial saving. But in reality, there's a time cost and there's a financial cost, because what is the compounding benefit of a person that consistently does one thing well and was hired to do that thing and loves doing that thing, and also creates a process around it so it's repeatable for someone who comes in, as opposed to someone ad hoc, doesn't know what they're doing, but they're cheap and they're
Yeah,
passionate.
that's right. And that's the other situation we come across, is that quite often people who've been the users of the organisation, they've benefited from that not-for-profit. They're given an opportunity for employment, and it makes sense. There's a relationship there. So you get someone who's available and who's keen, but not necessarily suitable. So at that point, the organisation, you've got to figure out whether they're trainable and if you have the time and resources to train them. So yeah, it's a big, volunteers is another, that as you brought up, volunteers in charities is a big area where that's, you're constantly investing, but you've got a high turnover as well. So sort of turnover in the accounts department is not, you can have turnover in other parts of the charity and cope, but turnover in accounts is a little bit harder. The other thing that's really common is someone who's been there for years, if not decades, retires, their finance officer, for example. And then is it doesn't matter how much notice you've got, replacing them is very difficult because they've got so much knowledge. And also they've often been entrenched in certain ways of doing things. So that's where the teachable sort of quality in a new person is really good, because these days you need to have online skills as well. It's kind of crucial that, because it's common to have a key office manager or person who is still doing things the way they did 20 years ago and doesn't want to change. So if you're a new CEO or business manager, you can feel stuck with these people because it looks like heartless to move them on, because they might have even been part of the founding team. So there's always a way to have a win-win with these folk if you're creative enough. Those are the sorts of situations that we come across commonly. Working with account staff to get accurate, it's data entry, but it's so crucial for it to be accurate, because all that accounting data entry feeds into their reporting, their cash flow, their financial management. So it's really important, and it's getting those people to understand that, and then training them, spending some time investing in them. So those are the sorts of things that when you're recruiting, you're keeping in mind.
What's the right type of person to recruit in that role? And then what's the appropriate training or things they should know to be able to deliver on that job?
Yeah, so it's very rare to find someone who's got everything that you need, the full package. So you're either finding someone who is really great with processing and learning new software and figuring out efficiencies. They might be all good. And then you've got someone who's got really good accounting knowledge. So they've got, they understand the logic behind the transactions that they're making. And so you've either got to be investing in bringing someone on to, for example, if you use Xero, it's great to invest in teaching Xero skills and efficiencies. But you also got to understand, maybe you need to do some basic accounting courses, or spend some time with someone who can train you in understanding how the numbers flow into the reports that are being sent to the board of trustees or the committee. So yeah, those are the sorts of things. We end up involving in training new staff and helping old staff review their processes and implement them, for example, relieving while a suitable replacement is found. And that takes the pressure off. And then also we perform the role of the finance manager, especially for smaller charities who it doesn't make sense to have someone with all of those skills just with part-time. So yeah, those are the sorts of things to look for. And we also sort of help a business manager or an employer to find that right person. We can have a look at here's the interview notes and everything like that. Here's the key things to ask them. I think the key thing, when you're recruiting, really, really important, is always, always, always talk to their references. So someone can present really, really well, but the reference might highlight something that isn't a showstopper as far as taking that person on goes, but it gives you something to keep an eye on or to work with them as part of their development. So you might go, yep, they're a really good fit for us. And charities are really put high on their list as someone who shares their values and is a good fit for the organisation. Yeah, but you also got to check out, especially for accounting, what is their actual situations that they're going to be in with you. How have they dealt with that in the past? So it's just asking those right questions in the recruiting process.
Now, I'd be curious because, I used to, with sales training, I would do things intuitively off vibe. And then I learned that that's not a good reflection of a talented sales trainer, someone that understands the numbers and what moves those numbers and what are the most important ones. So are there questions that you could ask that really highlight their skill discrepancy or skill set specifically? Yeah. What would be some of those?
Well, I think it'd be best to think of a situation that you've had in your organisation that was a pain point for you, and go and give them that as a scenario and say, if this was you, what would you have recommended, or what would you do? And in there, it would be important, especially to have an ethics question as well, sort of one that's got a little bit of an ethics bent to it. But it's finding out what is their experience, and how is it going to relate to what is your reality in your accounting office. So that you can pick, not necessarily that it's going to prevent you from employing them, but you're going to know that this is an area to upskill in, for example, or invest in.
And then on the upskilling part, because I find it's really easy to get people started from a strong position. It's really hard to turn the ship around. So I'd always obsess over like values and attributes and inputs and making sure they're around the person that demonstrates the behavior that's expected. What do you think about, so you've hired them, you think they're good, and then onboarding, what should they have access to? What should they know? What's the sequence? What's that first few weeks look like?
Yeah, and that all depends on whether or not you get a handover with the previous person in the role. So the most ideal situation is you get a handover, and it should be at least a week. And ideally, for example, recently we had a situation where the person leaving spent 2 days with our person taking over the finance role, and then our person did the work for the week that the person leaving was there for, so that the natural questions could come up. Because you can go over things together as much as you like, but when you actually, the reality of doing it brings up other questions. So while the person's still there, that's ideal. You very seldom get such an ideal situation. So if you don't get a handover, the reality is there's going to be a mountain to climb. And so the organisation just needs to be aware of that. There's going to probably be more hours required than what was agreed to for a start, in order to get, where is the information being held, what are the processes and the procedures. Usually you want to come in and do things the way that they've been done, because it might have been done that way for a long time for a good reason, before you go trying to change anything. So, and it's learning that if you're new, you're coming in and you see a whole lot of things that you think, well, that could be done better. Just take baby steps, because as we know, big ships to turn around, and small changes can affect a lot of people down the line. So, those are sorts of,
There's a formula in chemistry and living systems, like homeostasis. The rate of change is proportional to the rate of resistance. So the bigger the change you make, the system has to resist more. So coming in being like trying to fix things, change things is not as strategically smart as it could be. What do you think from an employer standpoint? They've hired someone. What should they expect for someone new? Like, it will take a week for them to even understand things, or they'll make mistakes here, or how do we identify if they're not good? So when the trial period ends, you can let them go. What should you be looking for?
Yeah, I guess accuracy, with accounting and finance, regardless of your of whatever else is happening, when you come into an organisation, accuracy is key and is expected. So it depends on whether you're having to fix up a previous mess. So one of the things you need to do is review what's happened year to date. So each organisation has a financial year end. It really depends on how close to that financial year end that you're starting as your starting point. What's ideal is it's the beginning of a new financial year, so that you're not responsible for what's gone before when you're being audited and whatnot. But so you should expect, though, accuracy, and that might take sitting down with the parties, especially when there's complications, like there are a whole different lot of funders that you've got to track. So every expense has got to be tracked to this funder, or this comes from this grant. It's using this grant. So it's not necessarily straightforward, and figuring out all of that intelligence it can take a while. So so it depends on the complexities in your organisation as to your expectations around how long it takes to embed a new person. The one thing I would definitely say is, and it depends on whether you've already got a finance a really competent finance manager in the organization. But if you don't, what is your external checks on your accounts team? And that's something that, you get that at audit time. You've got your annual accounts get audited, but you don't want to be finding out big things are wrong at the year end. So it is best to have someone who's checking on it. And there's a number of different ways to do that. You've got someone who comes and does the bi-monthly GST return, for example. They can look at the data for that 2-month period. Or you can have someone, outsource your monthly reports. So in running the monthly reports, you're reviewing the accuracy of the data and the logicalness and how does it go against budget. And that kind of brings me to the second sort of thing that we find is the quality of reporting. So obviously your people on the ground feeds into your quality of reporting. The information being processed is the reporting side. So most charities have a board of trustees or a management team who are relying on monthly reports or regular financial reports and their interpretation from someone in finance. And like the annual reports. A lot of this, the sort of difference with charities and schools, for example, but is a good idea for businesses, is having a budget. So they've got to have a budget. The charity services require annual reports with a budget, and the charity's return filed each year. And these have got to comply with the reporting standards under the External Reporting Board. So the person providing the reports doesn't have to be a chartered accountant because it gets audited, but they do need to be able to interpret and comment on the monthly results against budget. So, and then setting a budget is the responsibility of the board, but they rely heavily on the folk on the ground's input. So it takes skill to put a budget together in a way that'll be meaningful for reporting on the following year. Because a budget is just a snapshot of what you expect will happen. It's like a forecast. So if things happen that are unexpected, we don't change the budget. Well, you can't change the budget because of the reporting standards, but we just comment on why the actual results are different to budget. So what we're finding too in these tougher times is that budget forecasting and cash flow forecasting reports are requested more and more. The organisation needs to know, do they have enough funds to see through their objectives? And what has to change if it's not possible to get in more funds, which is happening now with a lot of charities. Their normal sources of funding are cutting off or reducing greatly. So they may have to cut back on some programs or some expenses. And that's not a data entry level skill to produce, a cash flow forecast. So yeah, those are the sorts of things we're finding that it's becoming really crucial to have that quality of reporting for the charities.
So I don't really understand. So you got a board of directors or board of people that oversee something, board of trustees, and they're like the watchdogs to make sure you're doing good stuff. Are they, or what a board of trustees? Like, do you just...
they're governance. Yeah, so they're not managers at all. So you've usually got a CEO or a business manager on the ground. Your trustees are people from all walks of life who are mostly donating their time to that organisation to help govern it and have governance. So it's really the global, what is the direction? What is our strategic direction? And so there's a lot of decision making that they do. And they need to be receiving financial reports. And the smaller ones might only be quarterly, but larger charities need monthly reporting.
Is that an expectation? You go, yeah.
Sorry, Corey, it's their obligation. The Board of Trustees have a lot of responsibility to understand or to, receive that information and make decisions based on it. So, yeah.
Because I know in trustee you have the prudent person rule and you have to live up to the expectation of how a good person would react. So with a board of trustees and a charity, so they have these obligations when they choose to give their time, that if they don't follow it, there's like a criminal risk, or there's like they get in trouble? Why do they have to follow the rules?
Not so much get into trouble, or the charity can get into trouble, but it's with you. It's usually around your tax obligations with GST and PAYE or payroll. Your are you if you become financially fiscal, are you doing the best job with the mandate of that organisation? So whatever the emission statement is that being achieved the best way with the funds? And the funds that they receive, quite often funders have got obligations that they have. They say, right, if we give you these funds, you've got to report back to us on how you spend them. And we expect then we're giving them based on it's going to be spent on this project, or something specific, or these salaries, or whatever it's for. Sometimes you get a lot of donations, and some grants are more open-ended, as in we're giving you these funds in good faith that you're going to use it to, achieve the objective in the most efficient way possible. So it's kind of more, it would be you get into trouble more of in a public way, I guess, if things went south. Yeah.
Okay. So you got these people that give you money, that have expectations when they give you this money on how you should use it. How do you manage that whole reporting side? You get quality reporting, and then these grant people or donors want access to something. How do you manage that process of communicating it to them, or tracking it, making sure you're not breaching any privacy,
Yes. Yeah. So all of that's in play. You from the finance point of view, it is tracking it, is getting it accurate in the accounts is really important. Often the charities have someone who's working, his job is specifically to attract these funders and report to them. So keep up the reporting to them. And it's really important that those people work closely with the accounts team so that they're on the same page. So that this person reporting to the funder is saying, we're spending it on this, this, and this, or has it actually been tracked on this, this, and this in the accounts, or is it all gone into the admin pot or some other funder's pot? What's important is that the funder who receives the reports, they are happy with them. They're happy with, yep, we can generally see that this is what's happening. So, I I guess to stick purely from an accounting point of view, it's communication with the accounts team and getting it as processes. So what is the process for the information to get into the accounts? We spend a lot of time on working on those. So a business manager who's got a credit card is going out and spending, and they're going, okay, I'm going to buy this, from Harvey Norman or whatever. I'm going to buy this appliance that is going to be used for this food project that we've got coming up with, with a community group. And so they have their receipt. So what happens to that receipt, and how does it get to the accounts person who sees an expenditure going out to Harvey Norman on a credit card? How do they know where to code that, and how do they know which grant was covering that funds? So it's a matter about putting in, and there's lovely apps, and Xero has a lot of add-on apps. It has Xero files, Xero app, and HubDoc apps that you can give people who hold credit cards so that they can snapshot that receipt at the time that they buy it before it fades on their dashboard, and they can handwrite on it, the clue for the accounts person as to what sort of code it is, what tracking, what grant, what code, and snapshot it, send it to, it goes into Xero files, and then the accounts person can pick it up and go when they're coding off, or there are a lot of manual processes where someone who is a credit card holder has to handwrite every expenditure and supply every receipt and, clip it on and present it at the end of each month so that the accounts team knows that, gets it right. So that's just one example of many sorts of processes that you need to have, that feed into the whole reporting thing.
And then just on the quality reporting, what are each of the reports that are important, and why are they important? I think a lot of people know why you're doing this report, because a lot of people don't want to do it, which is why you exist, which is good. But yeah, what are the reports and why are they important?
Yeah, so the basic reporting package would be your profit and loss, which in a charity is called your surplus and a statement of comprehensive income. We talk about surplus and deficit because you're not for profit, so you're not making a profit. So it's your profit and loss, which is a statement of income and expenditure, basically. And then your balance sheet or your statement of financial position, which is what we call it in charities. And that is a snapshot of your bank accounts. What are all your assets and liabilities as at the end of the month? And your income and expenditure, how did you go with getting the funds in versus spending it? And have you got a surplus or a deficit at the end of the month? And then also that's the month, but what about your year to date? So when you add up, it's your financial year might be from July to June, for example. So how have you gone year to date with your income and expenditure? And then the important thing is how you're tracking against budget. So that's something that specifically charities need to see. We had a budget, we had a forecast of how we thought things were going. How are we going against budget? If there are variances, there's a big variance here. We're getting a lot less than we budgeted. What's the reason? So the other report that would be, is kind of what we call an observations report or an exceptions report or a executive summary, some sort of comment from the finance team that says, okay, here's why this isn't tracking the budget. Here's how we see your the things that you need to be keeping an eye on, the things you need to worry about, the things that are coming up. Your working capital, so that's from the balance sheet, is if you had to suddenly pay back all your liabilities tomorrow, do you have, you enough cash in the bank plus things that you can sell to cover those costs? So your working capital is something that you need to keep a close eye on. That would be really basic reporting.
Yeah. And let's say you go, and then there's
then there's if you've got tracking, if you've got departments or branches or areas, for each of them might have their budget. So you might want to break down report profit and loss for those areas.
Okay, so let's imagine you're a CFO, you come into the board of trustees, and you want to put these reports down. What, in terms of a cadence, like how often should you have these meetings? What should be involved and who should be across it and how you should talk about it? What's a tactical way to actually utilize those in meetings and a structure to do so?
Ooh, big question. Normally, the finance manager, so if you've got a what we call an in-house finance manager, usually they are attending the meetings or the CEO is attending the meeting. So the finance manager might prepare the reports, sit down with the CEO, make sure that whoever is attending the board meeting, make sure they know, that you're all on the same page. And they often want the CFO to help them understand where things are at. A CEO often has a little bit of enough accounting knowledge to see them through, and then they attend the board meeting. And there might be what they call a finance committee. So you might have a board meeting, but you've got subcommittees, and the finance committee might actually meet separately to the main board meeting. And it might be one or two people off the board who've actually got a finance background and know what they're looking at. They might meet with CEO or the finance officer and look at those reports. And then they report back to the bigger committee and say, yep, we're happy with the accounts, we're on track, or, we've got to look out for this. And it's just very general reporting to the board.
And there's a third piece. So there's three things we're going to do. What was the next thing you wanted to do?
Yeah, so the next thing is the quality of payroll. Now, this one's a really biggie. You could just spend hours talking about this, so we won't. But I single it out because it's a very common area of non-compliance or pain points for charities and businesses. So really the single biggest mistake NFPs make is trying to run payroll themselves and doing it internally. I just say that because, I picked up, for example, I looked at the Labour Inspectorate figures. The latest they've got is from a couple of years ago, 2023. There was 3.17 million awarded in penalties, wage arrears, fines, or so on, as a result of their investigations. So, and the things that they things that they audit are your payroll system and configuration. So what are you using and how's it set up? Your payroll process, like what are your policies and procedures? How do you do payroll? And then your data accuracy and compliance. So that's, does the person running payroll actually know what they're doing and getting it right? Yeah. So look, when we first started doing payroll, we were just coming across, it was just like a nightmare. And we had to make a decision. We thought, right, if we're going to help people with payroll, we just decide, yes, we're going to help people with payroll. So what we did is we joined the NZPPA, the New Zealand Payroll Practitioners Association. We put all of our bookkeepers who do payroll through their certification, their qualifications, their courses, and their certification. So we've got payroll leaders, payroll consultants, practitioners, specialists. And then we back each other up. So for every payroll we run, we have someone who does the checking. So if you get someone to check if there's a new employee set up, if there's an employee being terminated, if there's a whole bunch of bonuses being paid out. So anything that's the complications that can cause issues that we know about. The common areas of non-compliance, I'll just list them off. There's 6 sort of areas, and then maybe we can touch on each of those. So here's the things I come across. There's a lack of employment agreements, like there's no employment agreement between the employer and the employee, or there's one that's inadequate and doesn't serve either very well. There's poor record keeping. There has been no agreement reached between the employer and the employee on what their annual leave entitlement is. There are incorrect calculations being made, especially on leave. There's an incorrect use of casual staff, or there's just generally poor processes, and they're usually around time and attendance and leave records. So, yeah, those are the things we commonly come across. Employment agreements is kind of an obvious one, and that's where a lot of, if an employee gets disgruntled and it's whoever is sorting them out always goes back to the employment agreement. So if you don't have one, you don't have a leg to stand on. There are, at the very least, the employment.gov.nz has an employment builder, and it comes across the minimum requirements. So there's minimum requirements to have in your employment agreement. So it's just being aware of those, making sure they're in there. If you intend to grow your business, or as an employer, you're going to be growing, just pay the money and get someone to work with you on getting a good employment agreement that works for your situation. So for your industry, for your size, and for your complications, you need, it's better to have a tailored one and to get someone who knows what they're doing to help build it with you. And then once you've got it, it's your template. And then it's just good to review it when things change.
Let's add some context on that too. I used to live with an employment lawyer, and she would represent the companies. Pretty much every time, even though she's very talented, she would lose. It's just by how much. So it's very favorable to employees. It's a lot easier to have an ambulance at the top of the hill than clean the mess up at the bottom.
Yeah. Yes. We had a pendulum swing, and it has swung very far in favour of the employee. But and it needs to. But that's where you've just got to have your good things in place, unfortunately. So that's why this area is contentious, because there is a lot of litigation. There is a lot of employment processes or HR processes going on that you've just got to be aware of. And then, believe it or not, record keeping, a lot of employers are unaware. They just, they say, right, I've got to employ people, and they start employing people and bring on a software and start using it. And they're not even aware that you've got to be keeping records for 6 years on all of your employees, on their wages and their time records, and on their holiday and leave records. And it's got to be provided immediately when requested. It's got to be in written form or easily accessed, and converted to written form. So not texts. We have a lot of tradies who, all of their guys just text their hours in, and then they just text the hours to payroll. That's not going to be compliant with good record keeping. So, yeah, that's just it's one of those things that's quite common.
Interesting. Wait, just on that. So, what is good record keeping for payroll? And is that just charities? Like, you have to have 6 years of every employee you've ever had for any company?
Yeah,
And what does that
businesses,
look like?
charities, as their Holidays Act. Or holidays. Yeah, it is the Holidays Act. As long as you have, and this is why we say, look, even though the data is theoretically in the pay, if you're using payroll software and you think theoretically the data is in there, we always say, actually, every pay run, save a copy of the pay summary and even a copy of all the pay slips into your online filing system, your secure online filing system. It's got to be private still, because at any point in the future, someone can go in and undo things that you've done. So anything that can be undone, and things can be undone with accounting as well, in Xero, and in payroll, keep a record of those pay slips so that you don't actually have to, for example, you don't actually have to send pay slips to your employees. You should, because it's good practice. But certainly keep a record of them, of what they looked like when you ran that pay run. So that's good record keeping. Also, their time and their leave. So if they're on wages, what was their time record for the week, every week for 6 years? And if they applied for leave, for sick leave or annual leave, what is your record of that? Yeah. So those are the basics.
Just on the leave thing, because I'd love to have a business where people don't have to ask me for permission to go on leave, but I also don't want to be stitched up like, oh, they've had 6 months off, but they haven't used their annual leave. What is, like, how does that even work? Like, annual leave
Yeah,
thing, and how you meant to process and document that?
exactly. And we come across that so common that the employee or whoever's running payroll doesn't realize how important it is to put the leave in, that, how important the leave record is and the leave balance. So they go, oh, I just have to pay them. They're away for a day, but I have to pay them anyway. So I'm just going to put it through like worked hours. The amount that I'm paying them is the same. And so they don't put it in. We've come across this. And then the employee goes to leave, and the employer goes, hang on, you took 3 weeks off this. You should only have a week's leave left. But in the system, payroll system is going to pay them out 4 weeks leave because no one ever put the leave through payroll, because no one got told that that person was on leave or whatever. So, it's really important and quite common. Yeah.
Yeah.
So, and in the first place, so you're talking about annual leave. In the first place, what we find is what is a week for that employee? So our New Zealand Holidays Act is that you get, the minimum requirement is 4 weeks annual leave a year over 12 months. You're going to earn that 4 weeks after your first week, after your first year of working. So what you've got to agree on, though, what is a week for that employee? And the problem we've had is that our Holidays Act isn't week, but a lot of our payroll software are set up putting annual leave as hours or days, and it doesn't actually relate to a week. Now, if you've got a standard salaried person who always works 5 days and 40-hour weeks, 8 hours a day, it's a 40-hour week. It's easy. They say, hey, I want next week off. It's going to be 40 hours a week's leave. But if you've got someone who works 2 hours one week and then 10 hours and then 20 hours and then 5 hours the next week, and they want next week off, what is a week for them? So that's why you've got to have it as an agreement. Someone who's on variable hours, what are you going to agree right from the start? What is going to be a week for that person when they take leave? Yeah. And yeah.
Makes sense. I feel like you're withholding so much that will probably turn into 10 hours of chat. But I think, is there anything else you want to add, or I think it'd be a good time to conclude?
Yeah. So just on that, the calculations on leave, that is another really big area, as I mentioned. Annual leave has to be paid at your ordinary weekly pay, and if you can't establish, or you work out the ordinary weekly pay and then the average weekly earnings, you've got to pay it at the higher rate of those two things, those two numbers. So if you've had someone who's worked a lot of overtime recently, their hourly rate for the leave that they took is going to be higher than their normal hourly rate. So it's a bit of one of the mistakes we find is that, payroll people or employers don't understand this. And we had someone who would go, oh, the payroll software would work it out right. And then they'd go, oh, the payroll software is paying them too much. And they'd override it. They're only $25 an hour. And they'd override the holiday rate. So they were effectively underpaying that person. So the calculations, knowing calculations, and then just touching on, the processes of time and leave. How do you get time and leave to the payroll person accurately? That's a real big one. We've sort of touched on that. And then lastly, the casual staff. It's a lot of people out there treating people as casual staff who are not truly casual staff. So they're paying them out 8% holiday pay as they go, and they never accumulate leave because they don't need it because they're casual. So, and the key on that is ask yourself, is there an obligation on the employer to provide work and an obligation for the employee to accept work? And if not, the employer doesn't have to give them work and the employee doesn't have to accept work, that's a true casual. And that's in a nutshell. And there's a lot of employment cases out there where employers are getting pinged, organisations are getting pinged because they were treating someone as casual. And what ends up happening is they paid them 8% all this time, and they then have to turn around and give them 4 weeks annual leave at the end of a year because they're not true casual. So they pay them twice for that leave. So yeah, those are the sorts of things. Those are pain points. Those are things that we're helping organisations mitigate, or not mitigate, but manage and get it right in the first place, or review your processes and make sure you're ticking all the boxes.
Perfect. All right. Well, thanks for coming on.
Real good time. Thanks, Ryan.